dispatching emergency responders to people's homes, being able to reach out and make sure that folks who are out there working have the adequate childcare for their kids, making sure that unemployment claims are getting processed, and delivering education online. Those are the people who are going to be thanked. Those are the people who are helping us pull through this time, and those are the people who are the real heroes of the moment. And so no matter what our jobs are, the one thing that many of us have in common, unfortunately, is student debt. And this pandemic has raised the profile of student debt and the crisis around student debt to an even higher profile than before. The relief from getting the crushing debt that we're all under was a serious problem, like I said, before the pandemic. And now, with uncertain times in front of so many people, it's hard to imagine how we're going to face it in the future. Our families and communities have been hard by this crisis. And if we want a recovery for everyone, our children need to get the education that they deserve. Folks who've lost their job and their health care need the support to get back on their feet. And we're going to need a much more robust social infrastructure than we have today, a much more responsive federal government, and state and local officials who recognize that public services are the key driver to the health and safety of our communities. There's not going to be a recovery without a reckoning. As long as large corporations like Amazon, Walmart, and McDonald's can continue business as usual, some of us are going to get left behind and left out. And I didn't like it before the pandemic, and I'm certainly not going to like it after the pandemic. As long as corporations are able to pay, like Amazon, are able to pay $0 in taxes, we won't be able to provide the services that we need right now. And as long as corporations like McDonald's can provide fast food workers wages that mean they struggle to make ends meet, and they're forced to use safety net services, we can't all fully recover. It's gonna take the corporations like those ones stepping to the plate and taking responsibility for the well-being of the workers and the communities that they live in. Right now, we're seeing our state and local government budgets being depleted by caring for people during this pandemic. And because revenues are declining so rapidly, we absolutely need corporations to step up and pay their fair share, especially those who are profiteering off the pandemic. Not everyone and not every business is hurting during this time, and we can't forget that. When we invest in a government that works for all of us, we're investing in all of us. State and local governments absolutely need immediate and significant resources to do the work that's in front of them. I know we have a state representative with us who probably knows it very clearly right now how badly we need the federal government to step up. We need to make sure that Congress supports the House bill that was just introduced just this week called the HEROES Act, which provides $1 trillion of relief for state and local governments. And so I wouldn't be me if I didn't ask if you would take a second to jot down a phone number and take some action, because every one of us has to lift our voice and lift the voices of about a dozen more people, each of us. I'm going to give you a phone number. Maybe someone can put it in the chat too. It's 844-967-2163. I'll say it one more time and hopefully it gets into the chat. 844-967-2163. And that phone number will get you connected to the switchboard at the U.S. Senate, where you can get patched through to your U.S. senators and let them know that we need them to stand with local government and state government to make sure we have the infrastructure we need. So without further ado, I want to thank our guest Seth Frotman from the Student Borrowing Protection Center for leading the fight for economic justice on behalf of 44 million student debtors in this country. Building on the important work many of them started at the Consumer Financial Protection Bureau, SBPC is helping transform the lives of millions of working Americans. And so with that, it's my pleasure to introduce Seth, the Executive Director of the Student Borrowing Protection Center. Seth?
Thank you so much, Heather. And it's really my honor and our honor to be with you here today. I jotted down a big note while you were talking because you said heroes. And I think, maybe one of the only good things coming out of this crisis is the recognition of the American people about how all of those on the front lines, your members, you all, are the true heroes of America. I think, rest assured, it did not take a pandemic for us to realize the valuable work that you guys do every day, just keeping our community safe, making our government work, taking care of our kids and our parents. For as long as any of us have been doing the work, we've just been in awe of you all and what you do every day, not only in your individual jobs, but your collective fight for, better wages, better economic justice, tackling income inequality, and I could just go on and on. And I think any of the gains and any of the protections that we're going to talk about today, which is simply not have been possible without all of your guys' hard work. So we're just thrilled to be able to be, we used to say share a stage. I guess it's now sharing a Zoom, which doesn't really have the same effect, but nevertheless. But I think, what we saw over all those years and having the chance to kind of talk to folks about the challenges they faced in their lives were that in many ways, the people just on the front lines, especially now, are just being dragged down by student loan debt. So just to give you some context here, as Heather said, nearly 45 million Americans get a student loan bill each and every month. There's now $1.7 trillion of student loan debt. So there's more student loans than there are car loans. There's more student loans than there is credit card debt. And I raised that today just to let the folks know that you're not alone. If you're scared about seeing that next student loan bill next month and you're trying to figure out how it is you're going to pay, there are millions of people just like you. And I think, there's a lot of really scary stuff out there right now, and we're the first to recognize it. But, we have been able to fight for some protections, a lot of which have been gained because of the work of you guys all in Washington that protect student loan borrowers, if they lose their job or they face significant loss in their wages or they get their hours cut back. And you're going to hear a lot from my colleague Mike about steps you could take now on behalf of yourself, on behalf of your family, your friends, just the people who you work with, to take one more thing off the table, to kind of put aside your student loan bill and figure out how you're going to make the rent. So I think there is a ton of work that we need to still do, and I can rest assured that we're fighting for you guys in Washington. SEIU is certainly on the front lines fighting for you all in Washington when it comes to student debt and so much more. We are going to continue up that fight. But what we wanted to really talk about today are things that you should know that you could be doing if you're worried about student loan debt, if you're getting a student loan bill. We're gonna talk through what those are, take any questions, and then continue to work on your guys' behalf. So again, it's just an honor to be here with you all today. And I think I'm turning it over to Randall, right?
Yep, it's me. Thank you, Seth. My name is Randall Bacon. I'm the organizing director at SEIU 668. And as both Seth and Heather alluded to earlier, student debt has been a crisis long before the COVID pandemic. And we've all been kind of doing our little work to try to chip away at it. And we all know that in chaos, there's always opportunity, right? So this isn't something that just was dreamed up overnight. I want to thank all the people at the folks at SBPC and SEIU for making the resources available to all of us. And we're doing a better job of lifting the relief options up to people. Some of the people that have been doing this work for a long time, I have the honor to introduce. Her name is Ronnie Green. She is now, I call her Madam Representative. She started off as a member. She became our Secretary Treasurer at Local 668, then became a BA, and now she sits in the House of Representatives for the state of Pennsylvania, the Commonwealth of Pennsylvania, and she is leading this work in our state. And I wanted to give her an opportunity to talk about some of the things that she's pushing, because she hit the ground running as soon as she got sworn in. So Ronnie, take it away, please.
Thank you so much, Brother Randall. And thank you so much for SEIU for undertaking, I'm not surprised, for undertaking this important work. I was a rank and file member for years, and I worked along many, many colleagues in Philadelphia who were drowning in student debt. As I became more active in my union as a member political organizer, as a staff organizer, business agent, and ultimately secretary treasurer of my local, I saw how student debt was not only harming my coworkers, but people all over our country, from all backgrounds and all walks of life. Every day, it seems like we hear a new COVID symptom. Make no mistake, the student debt crisis is not a new symptom of COVID. It's a symptom of rigged economics, where bad actors rig the educational and lending systems to profit at our collective expense. I became active because of my union. That's what inspired me to run as a state representative in Pennsylvania. Now, as a state rep, my very first piece of legislation I filed was student loan forgiveness for essential workers in Pennsylvania. I wanted to try to seize this moment that we're in right now to take action to push for change on this crucial issue. I'm so sorry. I'm glad to see that so many of you are here today. I encourage you to seize this moment, become active, and fight to unrig the rules of the system that has led to this student debt crisis. Anything that I can do, I will continue to support. I will always be SEIU in my heart. I actually had separation issues, but I'm here and I encourage you to undertake this and let's make a change. Thank you.
Thank you, Madam Representative. We appreciate that. I know you'll continue to blaze a trail like you've always done your whole career, and that we appreciate all the work that you're doing in Pennsylvania. And I have the pleasure of introducing another one of our members that has been blazing the trail as far as the student debt crisis in this country. He sits on numerous boards. He's been doing this work for years. And I can honestly say he's not an opportunist. He's done the long legwork. His name's Greg Reidlinger. He's an OVR specialist in Pennsylvania, and he's going to kind of share some of his story with you and his journey.
Thank you, Randall, and thank you everyone for putting this on and for participating. Just to give you a quick glimpse into my story. Like Randall mentioned, I work for vocational rehabilitation services in Pennsylvania. I'm a state government worker. I've been there for about 16 and a half years. Over that time, I've learned about and become involved in our union in many different ways, in a bunch of different leadership roles, and more recently, a couple different times as a temporary staff person, both in our organizing and our business agent department. My student debt journey obviously began years ago when I started school and started taking out loans, but to me, it really began in 2012. Our local 668, which is a government sector union that represents about 20,000 people in Pennsylvania, decided to form a millennial committee. And I was fortunate enough to be named the first chair of this committee. When we were developing our strategic plan and our goals to go along with our mission of getting younger members involved, one of the areas that we decided to focus on was student debt. It was a very key issue for me, although that had nothing to do with the selection of it. It was selected by people before I even had a say in it. But as a person back then in 2012, just to give you a glimpse of what my student debt situation was, over the course of about 20 years, I had basically I finished 2 master's degrees and was 1 semester shy of a third, all at private schools. The amount that I borrowed in my lifetime was $118,000 approximately. And due to some bad decisions and really no guidance at all, when I started paying back my student loans, that $118,000 had turned into $225,000. Right now, I pay my student loans through garnishment because it's about 50% cheaper for me to have 25% of my pay taken than it is to make the normal $1,700 a month payment that would be required with the amount that I owe. Even with the garnishment, the approximate $1,000 that I pay in student loans a month is twice what my rent is. It's by far my most expensive bill. These are the numbers that everyone recognizes, and the key thing that I learned in my progression in this work is that if you take away the specific numbers, my story is very similar to almost anyone who has student loan debt. What this has enabled me to do over time is not only become or continue to be a person with student debt, but I've enabled myself to become an advocate, both for my own situation and for the situation of every other person who's negatively impacted by this lopsided and skewed system. And at its core, that's why we're here today. It's one thing to know your situation, to know the numbers, and to have some idea of how you're going to pay it back. It's another thing when you truly understand the system and all the things that are in place to make payment easier and less burdensome on people. And hopefully that's what you get out of today. Most of us already know what we owe. This hopefully will give us a better way or better ways to make payments or manage our way through this system the best that we can and continue to live our normal lives. So hopefully you will get some of those tools from this to be able to know and understand some of the payback systems that might benefit you and your family or friends or anyone who has student loan debt. And again, that's the crux of why we're here, to inform you on how to benefit yourself and then advocate for this as an issue. So without babbling on any further, my job is to introduce the SBPC Chief Counsel, Mike Pierce, who is going to take us through the presentation. During the presentation, you will have an opportunity to submit questions and answers, and there will also be an interactive anonymous poll that will be on your screen during the presentation to complete as well. So Mike, I would turn it over to you and ask you to take us through this presentation.
Thank you so much for the introduction, and thanks so much for the opportunity to join today. As Greg mentioned, my name is Mike Pierce. I work on the team at the Student Borrower Protection Center. And today I'm going to try to offer some practical tips around how you manage student debt, particularly in the middle of the current crisis. First, I'm going to walk through some of the recent changes to federal law that provide some student loan borrowers, with a new set of rights and protections, but this doesn't apply to everybody. And I'm going to talk about who's in and who's out and what those new rights are. And then I'm going to walk through some of the protections that exist for all student loan borrowers and have been on the books for more than a decade. Really powerful tools to be able to get an affordable monthly payment, to be able to try to deal with some of this incredible student debt stress that so many people, myself included, are experiencing, and to try to figure out how to use the rights that you currently have to be able to make ends meet when times are tough. So first, I'm going to talk a little bit about the CARES Act. And for those of you that haven't been following particularly closely, at the end of March, Congress passed a new federal law that creates some really important new protections for borrowers that are covered. So first, I'm going to talk about what's covered here, and then I'm going to talk about who's in and who's out. So this new law, which became law on March 27th, waives all interest charges on people who have loans that are covered. It automatically pauses payments for every borrower with a loan that's covered, so that you don't have to make payments through September 30th. It means that the time that you've spent not making payments, with some exceptions, will count towards public service loan forgiveness and towards loan forgiveness if you're pursuing that under an income-driven repayment plan. I'll talk about both PSLF and IDR later on in the presentation as well. And I think most importantly for borrowers that are really struggling with their student loans, for every borrower that's covered by the CARES Act, the federal government has been told to stop seizing people's Social Security checks, to stop seizing people's tax refunds, and to stop wage garnishment. There's an important note I would add to that. So 2 weeks ago, we joined with some partners of ours at National Consumer Law Center and Student Defense to sue Betsy DeVos, because the law has said don't garnish people's wages. It's been more than 7 weeks now since the law has said don't garnish people's wages. As of May 7th, the government was still garnishing the wages of 54,000 people. So there's something to be said for Congress taking decisive action and helping some people in a really tough time. But those promises are only as good as the Trump administration's willingness to deliver on them. And there is a lot of additional work to do to make sure that every single person is able to benefit from their new rights under this law. It's part of the reason why we're so happy to be here today talking about these issues. So with that, I do want to talk about who's in and who's out as well. So this only covers borrowers whose loans are owned by the federal government. So if you have a federal student loan and that loan is a direct loan, or an older loan that may have been made by Sallie Mae or a bank, but that the government bought when it bailed out the banks in 2007 and 2008, you're covered by this. And that is the vast majority of student loan borrowers, but it's not everyone. And so if you have a private student loan, or if you have an older federal loan made by a bank, there's a good chance that you're left out. If you have a private student loan, you certainly are. We're continuing to fight on Capitol Hill to make sure that this covers everybody. But as of right now, there are between 8 and 9 million borrowers who are not covered by the CARES Act. So what do you need to know if you are covered? The payment suspension and the interest waiver are automatic, but we do continue to hear from borrowers that have had trouble getting documentation to show that the interest waiver was applied to their account properly. Their student loan servicing account might show something different. In the early days after the law changed, student loan companies were still automatically debiting people's payments out of their account. So it's possible that you had your March or even your April monthly payment taken out of your account, even when you didn't have an obligation to make those payments. So we're advising everybody to turn off automatic payments just as an extra protection, even though the student loan industry won't tell you you need to. And you also have a right to request a refund if an automatic payment has been taken from your account since the CARES Act became law. I'll talk about that in just a second as well. Garnishment, as I think is pretty clear from our lawsuit, is just a mess right now. And tens of thousands of people continue to have their wages garnished in violation of the law. Your employer needs to halt your wage garnishment. And as many employers have told their workers, in order for that to happen, they have to receive a written notice from the U.S. government saying, shut off wage garnishment. And this is truly the biggest scandal of the student loan CARES Act implementation. The government just didn't send those notices. So weeks went by. By the end of March, the government still had not notified employers. Into April, the government still had not notified employers that they were supposed to shut off wage garnishment. And so only now those notices, the department has said these notices have gone out. If your employer says they have not seen a notice from the government, there are steps you can take. We urge you to contact us. And we'll have more information about that at the end of this call. But protectborrowers.org/AWG is where you can go to contact us if you're still in wage garnishment in violation of the law. We do want to hear from you. For borrowers that have income-driven payments, there's some additional flexibility under this new law about when you have to submit your paperwork. And then lastly, I'm going to say this one more time, and I know I said it at the top too. If you had a payment automatically debited by your loan servicer, so not if you're in garnishment, just if you're in automatic payments, you can contact your student loan company and ask for that money back. You have a right to get a refund. So there are some open questions about what happens to everybody that's left out. So as I mentioned, between 8 and 9 million student loan borrowers are not covered by the CARES Act. So if you have a federal loan that's not covered, either a Perkins loan made by your school or an older federal loan made by Sallie Mae or a big bank, those are known as FFELP loans or FELP loans. Reach out to your student loan company. Many student loan companies are making accommodations for people in distress. It's generally not as good of a deal as the deal that Congress gave everybody else, but you might have a right to pause your payments. You probably do have a right to not get hit with a late fee if you're late on a payment. Many student loan companies, though not everyone, are freezing any negative credit reporting during the course of the pandemic, which is a good voluntary step, but not nearly enough. It's important to know, though, if you're left out, interest will continue to accrue on those loans, and you do have an obligation to make a payment unless you tell your student loan company that you can't. Another question that we get often is, if you had a bunch of unpaid interest on your student loan account before the CARES Act passed, what happens to all that interest? Is that going to get added to your principal balance? So the Department of Education has said that they will not add unpaid interest onto the balances of people's loans after the CARES Act concludes. We remain a bit skeptical again. This feels like the same sort of framing that we heard around wage garnishment. Trust us that it will work itself out. And so we're going to remain kind of doggedly on top of this issue, and we'll be sure to keep everyone alert if it turns out that this is mishandled as well. And then lastly, what happens to borrowers who work in public service now but lose their job due to the pandemic? Will the time in this payment pause under the CARES Act count towards public service loan forgiveness? And unfortunately, right now, the government's position is no. That's another place where we're continuing to advocate both with the administration and on Capitol Hill to try to make some accommodation, because obviously this is a debt relief program designed to address problems that people encounter as a result of the pandemic. It seems like maybe the most predictable problem is that you are one of the 30 to 35 million people who have already lost their jobs, millions of whom were working in public service yesterday and are no longer doing so. So again, that's a place where our organization is continuing to advocate on behalf of student loan borrowers, but the law as written right now does not offer the level of protection that we think it should. So again, just to emphasize one more time, who's in and who's out under the CARES Act. Borrowers who have loans that are direct loans, and borrowers who have loans that were purchased by the federal government during the bank bailout. So generally that means it's an older loan that may have been made by a bank or a private student lender, but it would have been made in 2007, 2008, or 2009. If you have an older loan made by Sallie Mae or a big bank that is a federal student loan, it's almost certainly not covered by the CARES Act. And if you have a Perkins loan that was made by a school, it is not covered by the CARES Act. We have some step-by-step instructions in the slide deck, and we'll make sure that everyone has access to the slides after the conclusion of this. I'm not going to walk through the step-by-step here, but this presentation does include instructions on how you can actually go into the data system the federal government runs, look up your student loan information, and figure out whether or not you're covered by the CARES Act. And that's a really important tool to both understand your rights and hold your student loan company accountable if something goes wrong. So now I'm going to pivot away from the new rights that so many borrowers have under this new federal law to the really important set of protections that have existed for student loan borrowers for a decade or more. And I'm going to use the next 10 minutes or so to walk through these rights and protections that borrowers have, at which point I think we're very happy to answer some questions. So first I want to talk about student loan repayment plans for borrowers with federal student loans. And in talking about the CARES Act, I talked about private loans and federal loans. And I talked about loans owned by the government and loans not owned by the government. For this part of the presentation, what really matters is whether you have a federal student loan or not. It doesn't matter whether it's an older federal loan made by a bank or another private lender, or a direct loan that's made directly by the Secretary of Education. What's important is that it's not a private student loan, which is made by a bank or another private lender, and the federal government has no involvement at all. So there are a bunch of common repayment options. I think this is just a fantastic illustration of how to think about each of them. There's a ton of complicated jargon in student loan repayment. The federal government does not make it easy for you to know your rights or understand how any of these programs work. And at every point in the next 10 minutes, I'm going to stop and tell you what I think you need to know to be able to make heads or tails of this stuff, because it is a lot of jargon. And the key insights are actually really, really simple, even though the programs can be very confusing. So there's four general kinds of payment plans. The most common, the one everyone starts in, is the standard payment plan. That's why they call it the standard payment plan. And you're expected to make the same monthly payment every month for 10 years, at which point your loan's paid off. It might be longer for a borrower with a consolidation loan, as is true with kind of everything in student loans. There are always exceptions. But if you just finished school or just separated from school and you started making your loan payment, this is where you're going to start. The government expects you to make the same payment every month for 10 years. At the end of that, you're done. If you can't afford that payment, you have a bunch of flexible options. You can make the time you repay your loans take a little longer. That's the extended payment plan. You can stretch that out to 20 or 25 years, depending on how much debt you have. If you want to make a very low payment at the beginning and gradually make higher payments over the course of 10 years or longer, depending on the loan you have, the graduated plan means you're always on a path to be out of debt on a fixed period of time. But in the beginning, you're paying only the interest on your loans. And by the end, you're making a pretty substantial monthly payment. So all three of those are really common. Lots of people take advantage of them, but they're not the best option for most people that are experiencing financial distress. And I think we're really going to spend the rest of this next chunk of this presentation talking about income-driven repayment. And if I could leave you with this slide and with the next couple with one piece of really important information, it's that you have a right to make student loan payments based on your income. And I'll talk about what that means in a minute. But a lot of people don't know that. They think that whatever's on their student loan bill is what they have to pay. And if they can't afford to pay it, they're going to default on their loans. And that's kind of the end of the story. And federal student loans are different. This is a right under federal law. Student loan companies have made it excruciating for borrowers to access these programs. There are lawsuits in courtrooms across the country alleging that student loan companies have stopped people from accessing these rights because the paperwork's hard for companies to process sometimes, and because it's more expensive for them to have a customer service rep on the phone with you, walking through how to make heads or tails of all these government programs. And so they just don't. And sometimes that's illegal. And so I would say, if I could leave you with anything here, it's that you have a right to make an income-driven payment. And what does that mean? That means you have a right to set your monthly payment based on your income. There's a federal formula. And the key part of that federal formula right now, as tens of millions of our fellow Americans are losing their jobs, is that you don't have to have an income to make an income-driven payment. I'm going to say that one more time. You don't have to have an income to make an income-driven payment. And if you don't have a job, or if you've received a reduction in hours so that you're not making very much money, your, quote, payment under an income-driven payment plan is $0 per month. What makes that a payment? Why is that different than just taking a break from making your payments, pausing your payments, or using a forbearance or a deferment? It's different because every month you make a $0, quote, payment under an income-driven payment plan, you're actually making progress towards getting out of debt. And that's because these programs have another set of really important protections: loan forgiveness. So if you're in an income-driven payment plan for 20 years or 25 years, no matter where you work, no matter what else is going on in your life, as long as you're in an income-driven payment plan for 20 or 25 years, depending on the kind of loan you have, your loans will be forgiven even if you haven't paid a dollar. If you put your loans in forbearance, if you call your student loan company and say, I just want to take a break from making payments, you aren't making progress towards getting out of debt. You're just kicking the can down the road. So it's really important to know your rights here. Having a right to make an income-driven payment isn't just a right to get some payment relief. It's also a right to get out of debt. If you work in public service, there's an even bigger benefit. The Public Service Loan Forgiveness Program says that if you're in an income-driven payment plan for 10 years, then you're debt-free. And I think everyone understands that there's some really serious problems with the Public Service Loan Forgiveness Program. Over the past couple of years, the federal government has been denying 99% of people that apply for debt relief under PSLF. And part of the problem here is that the rules can be confusing and that borrowers might not know the exact 16 steps they need to take to get on track. And we have resources that we can share for folks that are working in public service. But the bigger problem here is that at every step, the Trump administration and the student loan industry has made it nearly impossible for borrowers to make heads or tails of their rights. And so a lot of the work that we do in the states and in Washington is help protect student loan borrowers when their student loan companies cheat them out of their rights, just like programs like Public Service Loan Forgiveness. So I would say, don't be deterred by the headlines that 99% of borrowers are getting denied loan forgiveness under these federal programs. When you can connect the dots, especially if you have your union providing you with advice, if you have strong advocates helping you make heads or tails of this stuff, like, you can get out of debt using these programs. They do work for people. They just got off to a very rocky start, and frankly, we do not have a friend in Betsy DeVos. So I'm not going to walk through the last set of bullets on this slide, the types of IDR plans. We have a few slides in this slide deck that talk to you about the way that you figure out how much money you pay under an income-driven payment plan. But mostly you don't need to know that. It's a good rule of thumb that if you're single and you don't have any dependents and you make less than $19,000 a year, you'll get a $0 payment. It's a good rule of thumb that if you have a family of 4 and you make less than $39,000 a year, you have a right to a $0 payment. But figuring it out beyond there, there's a tool on the government's website. You can go to the department's repayment estimator. They will pull in your actual information from your actual student loans and tell you exactly how much you pay. But again, I don't know how important that is in terms of figuring out whether it's the right fit for you, because particularly for people that lost their job, how much you have to pay every month is less important than the other protections that are included in income-driven repayment. At that point, if you don't have an income, especially, or if you've had a significant reduction in hours, you have a right to a $0 payment, but you also have these other rights: the right to loan forgiveness, the right to bring your loans current by enrolling in IDR without paying your student loan company any money out of pocket, the right to have the amount of interest that accrues on your debt. Some of that gets picked up by the federal government, depending on what kind of loan you have. And then the other kind of key piece of information here, there are millions of borrowers who are in income-driven repayment plans right now, including, I'm sure, many, many SEIU members. You have a right to change your income-driven payment at any time your financial circumstances change. So if you've lost your job or your spouse has lost their job or you've received a reduction in hours, it doesn't matter what your payment was last month. All that matters is what your financial circumstances are right now. And so knowing your rights and taking advantage of them as soon as that financial shock happens is really, really important. It is the key to helping use these programs as a way to make ends meet. So how do I enroll in an income-driven payment plan? Again, there's step-by-step instructions in the slide deck. And just like the prior set of slides where we laid out how to figure out what kind of student loans you have to figure out if you benefit from the CARES Act, I'm not going to walk through the step-by-step process for enrolling in an income-driven repayment plan. I'm just going to flag a couple of really important insights. And the first is that for borrowers whose income really hasn't changed since last year, you can file an application online and you can, in as little as 20 or 25 minutes, use your tax information from last year and get an income-driven payment. You don't even have to pick up the phone and talk to a human being, which is great for us millennials. For everyone else, it's a more cumbersome process, and you really do have to depend on your student loan company. You have to fill out a paper application to be able to document your income if you have irregular income, or if you've recently lost your job, or you've been furloughed, or you've had some kind of other financial shock, like a spouse that's lost their job, and you're filing with joint income. So the paper-based process involves you going to your student loan company. They'll walk you through how to do it. It will typically take a little longer than the electronic process for a bunch of reasons, and you'll need some additional documents, but it's not a terribly cumbersome process. The other thing that's really important to know here is that you don't need to know which income-driven payment plan you want to enroll in. Again, it's a lot of jargon. It's needlessly complicated, but on both of these applications, both the paper application and the electronic application, all you should do is check the box that says, I want the plan with the lowest monthly payment. So again, the point I made a couple slides ago, it's not really necessary to understand the guts of these programs, how a company determines your monthly payment, how much you have to pay every month. They'll tell you how much you have to pay every month. And you can check this box that says, I want the lowest payment possible. And you know, as a general rule, if you're a single person making under $19,000, or if you are somebody who's married with or has a partner or has several dependents and you have family size of 4, making under $39,000, your payment will be $0 per month under any of these available options. So again, I'm not going to walk through how the online or paper applications work. I do think there's a couple of other tips to know as people are in real time seeing furloughs come through, reductions in hours come through, and job loss. If you are enrolled in automatic payments, even if you contact your student loan company the day before your payment is normally taken out of your checking account and say, I want to take advantage of my right to an income-driven payment plan. I want payment relief right now. I know I have this right. They're not going to be able to stop your next automatic payment. And so it's really important to know that you need to give a couple days to be able to get automatic payments shut off. But that's a big deal for people that are really struggling. You should know what status your loans are in. I think it's important to understand what your rights are when you contact your student loan company. So knowing you have a right to make an income-driven payment, knowing that if you're already behind on your loans, you have a right to enroll in an income-driven payment plan without paying anything out of pocket to your student loan company. So lots of student loan scams out there that will tell you something else. But if you contact your student loan company, you'll never have to make a payment to enroll in an income-driven payment plan. And also know that student loan borrowers are not going to be subject to negative credit reporting as long as the CARES Act is in place. And it sounds like most of the student loan industry outside of the CARES Act is also voluntarily not reporting negative information to credit bureaus right now. And again, if anybody's having trouble with wage garnishment, protectborrowers.org/AWG. Tell us your story. We want to hear from you. We are currently suing Betsy DeVos over this, and we're going to keep fighting to make sure that anyone that's illegally subject to wage garnishment gets their money back and that this stops. So there are rights that borrowers have if you're in default on a federal student loan. And I'm not going to spend a lot of time walking through your rights if you're in default. Again, this slide deck has really detailed information on how to get out of default. Just know that you have a couple of different options. A debt collector may tell you that it's in your best interest to rehabilitate your loan, to make a bunch of voluntary payments. Those payments are usually over and above what you might be taking out of your paycheck if your wages are getting garnished. So this break in wage garnishment is actually a great opportunity to figure out how to get out of default faster. You can also do what's called consolidating out of default. It's basically refinancing your defaulted student loan with a new federal student loan. And when you do that, which is the approach that we recommend for borrowers, if you're eligible, you can enroll in an income-driven payment plan right away. You fill out one set of paperwork, and when you're done, your loan is not in default, you no longer have debt collectors calling you, and you're already enrolled in an income-driven payment plan right when you start. So we recommend people consolidate rather than rehabilitate. Everyone's situation is a little bit different, but know that you have a bunch of rights to be able to get out of default. Just because you've defaulted on a loan doesn't mean it's the end for you. I'm not going to walk through the specifics of rehabilitation and consolidation. I'd rather save the time for questions here, but know that we do have some really good information in this slide deck to help people make that decision about what the right option is for them. I'm going to conclude here with just a little bit of detail around options for private student loan borrowers. So student loan companies in a bunch of states have announced that for every borrower with a private student loan and every borrower with a federal loan that's left out of the CARES Act has this set of rights. 90 days worth of forbearance that you have to contact your student loan company to qualify for, waiving late fees, no negative credit reporting, and a halt on debt collection lawsuits for 90 days starting a couple weeks ago. This is thin gruel for people that should just be protected by Congress and were left out of the CARES Act, but it's not nothing. And so the biggest student loan companies in the country were part of this deal, and they affect borrowers in the states that are listed on this slide. We are waiting eagerly to see what Congress does to fill in the gaps here around the CARES Act. It's possible that the next stimulus bill that comes through Capitol Hill will include some more relief beyond what's here. But know that certain borrowers in these states that have certain student loan companies are going to get some protections here voluntarily, but it's really not enough. Many private student loan companies also offer payment relief if you're struggling and you need an affordable monthly payment over the medium term. This is not specific to the pandemic. This is the challenge that many borrowers with private student loans face when they're experiencing hardship generally, whether that was during the Great Recession or 2 weeks ago or 3 weeks ago or 6 months ago. And you have to negotiate that deal with your private student loan company. It's just like you're trying to work out a payment plan on a credit card debt or a mortgage you can't afford. And the process is very hard for people, and companies are not inclined to work with borrowers. And we hear all the time from borrowers that just get stuck. But it's always worth asking for help. The first thing you could do is try to negotiate a deal with your student loan company. And some companies do have programs that offer relief for borrowers, either temporary or permanent relief. Temporary relief is much more common, but you do potentially have rights, and you should contact your student loan company and ask about them before you look at your bill and decide you can't afford it and just choose not to pay it. If you're in default on a private student loan, this works just like being in default in any other kind of debt. You're going to get harassed by a debt collector. The debt collector is going to say you owe everything you defaulted on immediately in one lump sum. They're going to try to get your credit card information over the phone. They're going to be aggressive. Know that you have the right to demand they verify the debt is valid. You have rights under the Federal Fair Debt Collection Practices Act to not be bothered by them if you choose to opt out of getting debt collection calls. You also have a right to negotiate with your debt collector, and you might be able to pay off that loan by paying pennies on the dollar, depending on how old the debt is. But you should also know that if it's very old debt, state statutes of limitation apply. So there are very old debts that companies can try to get you to voluntarily make a payment on, but you don't actually have a legal duty to repay. They can't sue you. They can't garnish your wages. And so you should know your rights. And if you think that something doesn't make sense, ask for documents and don't pay any money until you verify that that debt is valid and that you're not protected by state laws. In this slide deck are the escalated customer service information for the biggest student loan companies in America. So people continue to complain that in the middle of this pandemic, call centers have reduced staffing, they've reduced their operating hours. It's impossible to get through and talk to a real person. What we provided here are the email addresses to get help if you're having trouble getting through on the phone to your student loan company. We've also provided the Twitter handles of all the major student loan companies. Surprisingly enough, they tend to be more responsive on social media than they do when they're actually interacting with their customers. And so if something doesn't seem right, or if you can't get through, tweeting at your student loan company is really not a bad strategy to get somebody's attention. With that, I think we're happy to answer questions. And again, I wanted to thank everybody at SEIU for the chance to join here today. It's really been our pleasure to be able to talk to you guys about your rights. And if I could leave you with any final thought, it's that you have a right to make monthly payments based on your income, and don't let anybody talk you out of your rights.
Great, Mike. Thank you very much. And thank you for everyone who has stayed on the webinar. We hope this has been informative. So without further ado, let's begin with a few questions. Mike, the first question, if someone makes their student loan repayments during the first 12 months, each month in a row, will they get their origination fee refunded?
So there are some older student loans that have a bunch of different interest rate and refund benefits if you make on-time monthly payments at the beginning of your student loan repayment process. We don't see that as much with newer student loans. Federal student loans don't offer that feature anymore, but private student loans typically do. So it may be an origination fee that gets refunded, though now most private student loans don't actually have origination fees. We see interest rate breaks more commonly. So you might get a reduction in your interest rate if you graduate from school. You might get a reduction in your interest rate if you make your first 12 payments on time. Every loan that offers these kind of features is a little bit different, but federal direct loans, the most common kind of student loan, is one that just doesn't have that set of terms anymore. And it's been more than a decade since federal student loans offered that feature.
Great, thank you. Our next question, if you have a federal student loan, does the 120-day refund policy get extended for the period that the CARES Act is in effect?
That's an excellent question. I'd encourage you to follow back up with us afterwards. The CARES Act doesn't cover loans for borrowers that are still in school. So the process of getting your money back after you've taken out those loans is something that you need to talk to your school financial aid office about. The CARES Act doesn't actually change that process. And we know that there are lots of people that are separating from school as schools switch to online only, or may just have trouble keeping up with their classes. And there's a lot of challenges that borrowers are experiencing as they're separating, changing schools, transferring, making sure that they retain their eligibility for future federal student aid and don't owe more money than they should on the debt they've already taken out. So if that's happened to you, I'd encourage you to contact us afterwards and we can try to figure out who the right person is for you to talk to. But the CARES Act doesn't actually affect that.
Thanks. Our next question, if someone's working for a nonprofit organization with a partisan affiliation, would they be eligible for public service loan forgiveness?
The answer is it depends on the kind of nonprofit, but generally no. So the Public Service Loan Forgiveness Program provides access to loan forgiveness for any 501c3 nonprofit. I'm not aware of a partisan 501c3 nonprofit organization, though maybe there is a foundation that's affiliated with a political party someplace that falls into that category. So I wouldn't say no as a blanket, but generally speaking, 501c4s are the section of the tax code where political organizations incorporate. There's also a couple of other sections of the tax code, but those are generally speaking not qualifying employers under the Public Service Loan Forgiveness Program. There are some exceptions to that as well. And if you have a particularly unique case that you'd want to talk about, again, I'd encourage you to contact us. But generally speaking, if you don't work for a 501c3 and you don't work for an organization that provides this very specific set of services that are spelled out in the program, public health services, being a teacher, there are several others serving in the military. There are other kind of specific functions that are not 501c3, but you might work for a private not-for-profit organization and qualify. But I think generally speaking, partisan organizations are not 501c3s. And so unfortunately that doesn't work for you.
Great, thanks. Mike, next question here. Is there any information out there, and we can also, help get you in touch with the, correct, help point you in the right direction. But is there any information about what would happen with a public service loan forgiveness where a significant amount of money ends up being forgiven after 10 years? Will that amount be taxed as income?
So the good news is no. So benefits under public service loan forgiveness are never taxed as income. Federal law actually says specifically that you are not able, the government is not able to treat any amount forgiven under public service loan forgiveness as taxable income. Unfortunately for borrowers, they're going to get other kinds of student loan forgiveness. The law doesn't give you that same set of rights. So borrowers that are just going to get loan forgiveness after 20 years or 25 years may be subject to extra taxes. They will have to count it as income, but often for those borrowers, they have very, very low incomes and may not have tax liability anyway, or may be able to qualify for some kind of a hardship waiver from the IRS. But know that public service loan forgiveness, you don't have to worry about that. That loan forgiveness is never treated as income for tax purposes.
Great. Mike, our next question, how long does it take to hear back to see if you qualify for TPSLF?
That is a complicated question, and it should be a simple answer. So the company that's responsible for processing TEPSLF is a company known as Fed Loan Servicing. It's also known as FEA, the Pennsylvania Higher Education Assistance Agency. It's a student loan, a private student loan company that's backed by the state of Pennsylvania and has been the target of lawsuits across the country related to its mishandling of the teacher loan forgiveness program, of the Teach Grant program, of the public service loan forgiveness program, and a whole range of other abuses. And I say that in answering this question because the answer to how long you need to wait for a response has varied very, very widely depending on when you ask for that answer. We've heard from people that have gotten answers back in as little as 30 days. We've also heard from people that have languished for years, particularly where what you're asking them to take a second look at is payment history that goes back before 2012. Getting that answer can take a very, very long time. The best thing you can do is to keep receipts. So take good notes every time you talk to somebody. Try to get every answer you can from the company in writing via email or chat rather than trusting what the person on the phone says with you. If something seems wrong, there are places to go to complain. The Consumer Financial Protection Bureau takes complaints from borrowers about the company itself. And the Federal Student Aid Ombudsman at the Department of Education takes complaints about the Public Service Loan Forgiveness Program. I think being skeptical and keeping receipts is the best advice for everybody. But yeah, there is no guarantee on the timing for when you get a decision on TEPSLF.
Okay, and our last question before we turn it back to Greg. A problem one attendee's been having is that customers and counselors have been trouble with consolidating Discover loans that won't go into an IDR. And are there any suggestions for troubleshooting that?
I'm so sorry, Walt. Would you mind repeating that question?
Yeah, sure thing. A problem one of the attendees has when working with customers and counselors is with consolidating Discover loans that won't be allowed to go into an IDR. And are there any suggestions or workarounds in that case?
So Discover is one of the largest private student lenders. And as I mentioned at the very beginning when talking, or at the very beginning of the last set of slides, talking about private student loans for borrowers in distress, private loans don't have the same rights as federal loans do. It means that you're not going to be able to take out a consolidation loan and turn it into a federal loan. You're not going to be able to call Discover and enroll in income-driven repayment. The short answer is that for most people, the best deal you're going to get is the one that Discover offers you. That's not a good answer. It means that Congress needs to be doing more to protect student loan borrowers that have private student loans, but you don't have the same rights as borrowers with federal student loans. And you might be able to refinance into a loan with a lower interest rate or a longer repayment term if your credit is really, really good. But for borrowers that are struggling, refinancing isn't generally an option. And the only options you might have are what Discover's willing to offer you when you call customer service.
Thanks, Mike. And thanks for everyone who's submitted questions. As Mike mentioned, after this call, we're going to send around a number of resources, including this presentation and other pages that we have that can help you answer some of these questions and get in contact with the right people. So thank you all for attending today. And I want to pass it back to Greg to close us out.
All right. Thank you, Walter. And thank you, everyone, for listening and participating in this. Some key people I would like to mention and thank from my union, SEIU 668, our current president, Steve Catanese, past presidents Tom Herman and Kathy Jellison, current Secretary Treasurer Joanne Sessa, past Secretary Treasurer and current legislator Ronnie Green, and organizing director Randall Bacon, all of whom have been supportive in championing this issue within our local. From the international, Melanie, Robbie, Rachel, and Heather, and from SBPC, Walter, Seth, Bonnie, and Mike, and anyone else who I might not have had the opportunity to know or speak with that helped put this on. So thank you all for your support in making this happen today. The goal of today, and hopefully what you're walking away from, is that you understand this system a little bit more. It's a very complex system that thrives on people not understanding it because it increases their profitability. One key number I didn't share in my beginning, because most people get caught up on the $225,000 number, but to put it a different way, like I said, I borrowed $118,000, and so far I've paid back $75,000 of it and still owe $150,000. That is utterly ridiculous, but that is all too common in student debt stories. Same story, different numbers. So what we hope today is that you understand that this was an issue long before COVID-19 was in existence. And what the virus has done is basically highlight the shortfalls of the system and the negative impacts on its borrowers. Like any other issue, though, that we deal with in labor, we could move forward on this. And what it takes is an increased awareness of the issue, which hopefully today began, if not continued for you. And then with the increased awareness comes more advocating, both for yourself and for others. Coming out of this virus, education is going to be more important than ever. Other than the money issues, this budget or this virus has highlighted the fact that we can never have enough people in medicine and research and science. And the last thing that we want is for someone who has the capability to make significant change in our world to be sitting at home because they can't afford to go to school. So what I hope today is the beginning of the coordinated response is and our ask is, again, from what Heather said in the beginning, is to call Congress and urge them to pass the HEROES Act. Real briefly, the CARES Act has suspended student loan payments and interest on federal loans until September of this year. One of the provisions of the HEROES Act would extend both of those things until September of 2021. It also does allow, the way it's written now, for some forgiveness of people who have extreme economic hardship for a portion of their loans. So we ask you to ask Congress to support local and state governments and its citizens by passing student debt reform bills that help all of us. A number to call is 1-800-967-2163. Again, 1-844-967-2163. What we need to do is to make the call to advocate for this, to enroll ourselves in these programs so that we benefit and take advantage of the systems that are in place to help us through this. And again, together, make sure that our Congress prioritizes people over profits and our citizens over our corporations. So thank you again for everything. And I hope this helped everyone who took the time to participate. So thank you.